So based on what I'm seeing in the charts, and again, I'm a technical trader, I'm really more bearish on Bitcoin in the near term, so over the next 6 months or so, and then also bearish on the stock market based on the Fed tapering and potentially raising rates in 2022. Now, what I am bullish on is gold. Gold, I think, is going to be the biggest performer here in 2022, and you can see this beautiful wedge pattern forming right here on the charts on the GLD, or the gold commodity. And my guess is we're going to break out to the upside, and you should see a move up in the very least back to the highs from 2020, early 2020. And I think even a potential 3,000 price target on gold. And again, this is based on a lot of factors, but ultimately you have to look at the inflation numbers. I don't think inflation is going to go back to the 2% level. It's going to keep being a thorn in the side of the Fed. The Fed will taper, but ultimately people will rotate into gold. I do think it is the best performer in 2022.
But suppose interest rates do rise, isn't that going to be a headwind on gold? Doesn't that mean real interest rates would also rise?
Yeah, so interest rates moving up will be a slight headwind, but the question is, why are interest rates moving up? Are they moving up because the economy is roaring and the Fed has to kind of tamper the economy or taper in that regard? Or are interest rates going up because of inflation? And again, from the input costs of labor again being the biggest input cost to a business, we know that the demand for labor is epic right now. They're having to offer bigger and bigger salaries. That eventually gets passed through to the consumer. And therefore, again, you'll see inflation being the cause of higher interest rates. In addition, let's not forget the Fed just cannot raise interest rates unlimited amounts here. Maybe 2%, maybe 2.25% is your max upside on the 10-year. And the reason for that is that the Fed at this point has to recognize the debt factor of the United States. We cannot pay, high amounts of interest on our debt or we'll go broke. And the Fed also cannot create a situation where the economy starts to spiral out of control. So I think you have upside in interest rates to 2.25%, and then that's it. And then you still have persistent inflation, which triggers that gold move to the upside.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
They really cannot execute on what's expected. Even 25 basis point of hikes would be too much and unaffordable, like you said.
Yeah.
And the other side of the argument is that the Fed has more leeway. Well, the Treasury at large, the U.S. government does have more leeway than one may think. What's really going to be pressured is the corporate side and retail consumers. The government actually does have more leeway to raise rates. So what do you think? Where do you stand on this debate?
So I'm in the camp that the Fed does not have a lot of leeway here to do what they want, right? So you already see them tapering, where they're removing, I think it's 30 billion a month. They should be done with tapering by March of 2022. I think you'll get one interest rate hike next year, and that's it. And I wouldn't be surprised if by the end of the year, the economy is starting to kind of falter, and they might even have to think about additional stimulus measures. So, again, it's one of these things where, remember, when the Fed tapers, they're going to be removing a 1.5 trillion in dollars from the system just right there. If you raise interest rates, it's going to remove essentially this, additional amounts, and that is going to put in a major, depression 0.5. Now, I wouldn't use the word depression. That's a little too drastic, but I do think it's going to create a kind of a rut for the economy where unemployment will go up. And then you know what the Fed's going to have to do? Their dual mandate. They're going to have to come out with and figure out stimulative measures.
The economy will falter. Can you expand on that? Why would the economy falter?
Well, it's just, think about the kind of the drug high that the markets have been on because of all this infusion of capital from the Federal Reserve, right? We're coming off of people having more money. The government was sending out checks, interest rates at historic lows. The Fed was pumping in 120 billion a month. And now the Fed is saying, okay, we have to take some of that back, not because they want to, but because they're being forced to because of inflation surging to 8% now on a yearly basis. And so this is going to put the economy in a little bit of an issue where it's going to have to fight these lack of stimulus measures in the system.
Okay, so let's assume that they do hike by 25 basis points. So that's one rate hike, as you have predicted. What's going to happen to the bond market?
Yeah, I mean the bond market again. I think the max upside on the 10-year personally is 2 to 2.25%. I would be shocked if it goes up much more, and if it does, you wonder what effect it's going to have on the overall system. So I'm in the camp that yes, I do think at some point we will break above that recent. Well, it's now not so recent, but 1.75% high on the 10-year. But I do not think the Fed will want it to get too high based on the U.S. debt and based on other factors that it will influence.
Circling back to gold, you earlier in the interview you call for potentially $3,000. That's more than a 50% increase from today's levels, more than 50%, because we're not at $2,000 yet.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race, you're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dan, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I intend, how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dan.